More questions here coming out of this. What are closing costs going to run you if you're buying a home?
What the buyers need to understand is there's a lot of things that are what they call closing costs that aren't necessarily costs that are going to your lender. Things like building your escrow account. We're going to set up on every FHA loan, we set up an escrow account for taxes and insurance for the customer.
What is an escrow account?
This is an account that your lender holds for you, that they set aside your taxes and insurance for the year, so that when you're making your monthly payment, a portion of that payment's going into this escrow account. When the tax bill becomes due, they just pay it for you out of that account. And the same thing with your insurance. When the insurance renews, they'll send a check to your insurance agent.
Now, an interesting thing for people to note when you're buying and selling homes, your insurance is paid in advance and your taxes are paid in arrears or after the fact. So
Sure.
You actually have a disparity there between what's going into escrow. When you sell a house, you can call and get your a refund on your insurance policy. But also when you're selling a house, there's that added expense that you're going to pay the taxes from the beginning of the year to the date of closing for that year, unless you're at the very end of the year. So it can be a little confusing, but it's really a very simple process, and your agent can help you decipher those numbers and understand what goes where.
Sure.
So on those closing costs, is there a percentage that you would say if you're buying a house that there's a certain percentage paid in closing costs?
The norm and what FHA allows and what, say, on a VA loan and conventional is typically they'll allow, if you're going to have the seller pay those for you as a customer, they'll allow up to 6%. Now, we don't always need those. When you get down into a lower loan amount, I would say under 70 to 80,000, you're going to need that full 6% number.
Because some of those costs are fixed.
Exactly. So they don't have to do necessarily with your loan amount.
But the higher you get up in price, an appraisal is going to be an appraisal,
Sure.
whether it's a $100,000 house or
Right.
a $400,000
Right.
house.
The higher you get in loan amount, the only real things that changes are some of your title fees. You know, title insurance is going to change based on your loan amount. And any origination that you might be paying to your lender is going to change with the loan amount, because typically it's based on a percentage. So insurance is another one that you pay a year of insurance at the closing table, and that's going to change. So that's why those closing costs can go up a little bit with the bigger the house that you buy or the more expensive house.